The three scenarios, what are they?
Well, the three scenarios that our Bloomberg Economist has sketched out are March, April, and July. And hey, I mean, there's arguments for all three. I think markets and economists are mainly zooming in on March and April. And obviously, the board member Takata's remarks yesterday fueled a lot of speculation about, hey, maybe they will actually go early in March. There's a lot of excitement about that. And then Governor Ueda, speaking in São Paulo in Brazil at the G20 earlier this morning, local Japan time, seemed to keep his options open, really. He didn't talk about the need to immediately act. He said that they still could not foresee whether the price target was made or not. That seemed a little bit weaker than what Takata had said. But I think really he was just keeping his options open for both March and April with those comments. He said he needed to see more data, but at the same time, he was playing down the significance of the recession that Japan's economy is in. He said that, hey, you know, we've got a kind of leveling off of frothy post-pandemic growth. So he kind of suggested that that was not something to worry about too much. So I think what he was doing really was keeping us on track for a rate hike in March or April, but not giving away whether it's going to be March or April. Now, if you look at the market pricing, it's all over the place.
That's right. And to be honest, it's been so confusing, and you got to wonder whether markets are prepared, whether it is March or April. It could be in disarray.
Yeah. Now, if you look at that pricing from today's comments from Ueda, we're seeing that swaps, overnight swaps, now they're highly volatile, so we have to be a little cautious about interpreting them. But they're up at 43% now for March, compared with around 26% at the end of yesterday. So that March scenario is still very much live in the swaps markets. If you look at the currency, though, the currency yen weakened again. Hey, that suggests less immediacy. So currency traders thinking about something else. Of course, there are lots of other factors feeding into the currency market. Bonds, well, they're still up above the yields, still up above the where they were before Takata spoke yesterday. So that's suggesting, still the excitement over March is there. Now, just throw something else into the ring here. We spoke with influential economist Kazuo Ueda yesterday, and he's still got contacts at the bank. He correctly predicted changes in YCC last year. He says, look, it's April, not March.
When MoMA speaks, you listen. But really, what does it all mean for the yen, Paul? I mean, yesterday when it breached 150, people were talking about the white smoke. I mean, where does it go from here? Is there a sense in the market?
Hey, well, look, I think one thing that we need to just make clear here is that even if Japan does get rid of this last remaining negative interest rate in global central banking, we're going from minus 0.1 to 0. This is not like some huge rush or surge of interest rate hikes. So, hey, you know what? I mean, symbolically, it's going to be important. It is an important, significant move. It does suggest that Japan is pivoting to some kind of new normal. But I think the big moves for the currency market ultimately are going to depend on the Fed moves. They're quarter percentage point moves. We've still got talk of maybe even 3 this year. I think that's going to be, in combination with the BOJ, that's going to be the big driver for the markets, and we will be seeing the yen at stronger levels later in the year.